Hi guys, it's Stock Curry, and surprise! The CPI report came in much better than expected and the stock market rallied. This was the catalyst we needed to kick off the 2-month bull run in November and December. So let's get into it! Here's a breakdown of the October CPI numbers. CPI rose 0.4% month over month, which was less than expected. Now, 0.4% may have been less than expected, but don't forget this is still quite high. We're still talking about a 4.8% annual year-over-year increase in the CPI report. Now, you are going to see the headline number, that 8%, start to come down because we're starting to comp over much larger annual CPI increases from last year. And as we comp from last year, the overall headline CPI number appears to be much lower. So from here on out, we really have to focus on that month over month CPI increase. The smallest we've seen it in all of 2022 was a 0% month over month increase. Last month, we got a 0.4% increase, still quite high, but less than expected, and that's why the stock market rallied. On an annualized basis, CPI was up 7.7% for the year, and core CPI was up 6.3% from the year at a 0.3% month-over-month increase, which was also lower than expectations. This better than expected CPI report sent interest rates falling drastically. Mortgage rates fell to under 7%, falling from 7.22% to 6.62% in just one day. The US 10-year Treasury yield also tanked, falling below 4%. Now let's go over some of the details that were in the report, and then we're going to talk about how this affected the market and how it will continue to affect the market over the next month or two. Now, before we get into the details, I do want to point out a few things that are very important to remember. First of all, at a 0.4% month-over-month increase or a 4.8% annualized increase, that's still more than double where the Fed would like to see inflation at over the long term, which means interest rates from the Fed will have to remain high in order to get inflation down. However, this also means that with Jerome Powell having come out last week and saying that they might start to slow down the rate of rate increases, that this lends a lot more credence to the Fed doing a 0.5% increase in December rather than a 0.75% increase. And if the December CPI also comes in lower than expected, we might even see the Fed slow down the rate of rate increases even faster. And that's why we're seeing the stock market go up, and that's why we should continue to see the stock market go up. Now, let's take a look at some of the details that were in the report. Now, food and energy remain the sticking points. These are where inflation is the highest. As you can see, food at work and school up 95% year over year, eggs up 43%, airline fares up 43%, butter margarine up 33%, public transportation up 28%, health insurance up 20%, gas up 20%, gasoline up 17.5%, coffee up 15.6%, pet food up 15%. I mean, on and on. Food and energy were up a lot. And this is one of the main reasons why inflation remains so high. Now, when we get to core inflation, which is all items minus food and energy, that was up 6.3%. And a lot of that was helped by some issues where inflation actually went down. We take a look at women's outerwear, wireless telephone, computers, beef, veal, televisions, sporting events, and smartphones all down year over year now. And this is a good sign that at least we do have some categories that are starting to show some deflation. Unfortunately, energy and food remain extremely high, and they continue to go up in price. Of course, as Europe starts to enter winter and they are running at extreme shortages on natural gas and oil, that is going to cause our energy prices to continue to rise throughout the winter. And this is just going to cause inflation to remain extremely high. Unfortunately, while things might be a little bit better, they're not great. We're still not out of the woods yet, and the Fed still has a lot of work to do. However, this should help our stock market over the next few days. Here's how the stock market is responding and will continue to respond throughout November and December. Now, in a prior video, you heard me talk about how we should be getting ready for a massive rally, how the stock market will very often rally in November and December. The stock market was up a lot today. The S&P was up 5.5% and the NASDAQ was up 7.4%. Don't expect those kinds of days every day. This was one of the largest increases in the NASDAQ in history. The NASDAQ does not normally go up 7.4% in a day. In fact, on average, over the really long term, the NASDAQ goes up 7.4% in a year. So to have it rise that much in a single day is absolutely amazing. One of the best days in history for the stock market occurred on Thursday. I do think the remaining rally through November and December will be a lot more muted than what we saw today, and we might even get a small pullback on Friday. We'll see. But what I did notice is that leading up to today's CPI report, while historically the market will rise quite a bit after a midterm election, and historically the market will rise quite a bit in November and December after a midterm election, we didn't have a catalyst for that. We still had earnings going down. We still had a lot of really, really bad news pushing the stock market down. However, with today's CPI report, we finally got that catalyst to kickstart the rally for November and December. Now, in some private accounts, I bought some TQQQ today, which is a 3 times leveraged ETF. Essentially, that will go up 3 times as fast as the NASDAQ goes up, and I plan to hold that for about 2 months or so. Now, I realize that I haven't gotten all my predictions right lately. Nobody ever does. But over the past week especially, I've been wrong a lot. And during times like this, it can be very easy to kind of get down and say, this guy's an idiot, he's wrong all the time. But it's also important to understand that even though I've been wrong over the past week, my account portfolio is still up for the year. And there aren't a lot of people that are making money this year. I am one of them. And it's important to understand that everybody has bad weeks. Everybody has bad months. Heck, sometimes people even have bad years. I mean, just take a look at Cathie Wood's ARK ETF. It's down 61% on the year. You might look at somebody like Cathie Wood and think she's a terrible investor. She has no clue what she's doing, and everything she touches turns to crap. It can be very easy to forget, however, that in 2020, Cathie Wood had some of the best performing ETFs in the entire market. Her ARKG fund was up 180% in 2020. Her ARKW fund was up 157%. Her ARKK fund was up 152%. Her ARKF fund was up 108%. And her ARKQ fund was up 107%. Of the top 20 ETFs in 2020, Cathie Wood had 5 of the best performing ETFs. And just take a look at the 5-year increases as of 2020. The ARKG was up 380% over the previous 5 years. The ARKW was up 608% over the previous 5 years. And the ARKK was up 512% over the previous 5 years. It's easy to look at a year like this year and think that Cathie Wood is a terrible investor and completely forget about the fact that she has absolutely killed it up to pretty much last year. She was one of the top performing managers in the entire market for many, many years. Sure, she's had a bad year, but you know what? Bad times turn around and they become good again. Cathie Wood's ARK Innovation ETF surged 14% on Thursday for its best day ever. So this is just a great example that when you're in doubt about whether you're actually doing a good job trading or not, just zoom out, look at the larger picture, and take a look at how you're actually performing over the previous couple of years. You know, it's been a rough week for me personally, but I'm still up on the year. And in a market like this, where the overall market's still down over 20%, I'd say that's pretty good. So just keep in mind that yes, we all have bad days, we all have bad weeks, heck, sometimes we even have bad years. But in the long run, it will all work out. Your portfolio might be down quite a bit this year, but just stick with it. These bad times will end, good times will come, and the market will turn around and it will rally. And I do think that today was the kickstart of the next rally that I think is going to last about 2 months, just like the June or July rally lasted as well. Now, even though things are great in the stock market, crypto is still struggling, and FTX is the latest casualty. They're now warning that trading will be halted in a few days. They're saying that withdrawals will still be available, but as we've seen from some other cryptocurrency exchanges that went out of business, that does not necessarily mean that you'll be able to get your money. I do recommend withdrawing your funds from FTX immediately to ensure that you can, in fact, get your money out before they completely shut down. And of course, the best place to keep your cryptocurrency is on a hardware wallet. When you transfer your crypto to a hardware wallet, it is yours, you hold it, you have security over it, and even if a broker goes out of business, you're not going to lose your crypto like so many people have with so many crypto brokerages that have gone out of business over the past few years. So I would highly recommend that if you don't already have a hardware wallet for your cryptocurrency, that you go and get one immediately. I personally use the Ledger Nano X. There are a lot of other great ones out there. If you want to read up a little bit more about the Ledger that I use, I have a small write-up on it at my resources page at stockcurry.vip/resources. That's stockcurry.vip/resources. If you got a lot out of this video, then be a good friend and share this video with your friends and family so that they'll know what's going on in the stock market as well. And hit the like button and subscribe. And if you want to know more about my terrible prediction that I made yesterday and just show that I'm not a god, I'm not perfect, and I do get it wrong sometimes, if you want a good laugh, go watch the last video that I uploaded here.